following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. We're going to take a look here at the you can see a week or so actually this is the last 4 days, but this is a 30-minute chart. You'll notice how it makes these 1.8 expansions. You'll see the lines there between the 10th and the 12th. Then you also the 8 number for almost a whole day. And then this morning in Germany, it got all the way up to the 1.618 level up there at 11,848. The high was 11,487. And what I'd like to do is just to show you how these numbers sometimes, they fit together. If we'll take a look at them here, you can see here that we're watching the, I don't know what that is.
We're going to look now at this German DAX on the 30-minute. You can see after we made that 1.618 move up there, we've now broken down below that support that was there at 11,750. The reason why I'm showing you this, folks, is because of the fact that this thing really has a lot of harmony, just like the S&P does, and that's one of the reasons why it's so popular over in Germany. So, if you're up in the middle of the night and you want to trade something that's really volatile, it certainly follows the patterns and the ratios, very nicely. So I would keep that in mind. Now, what I want to do now is I want to take you down memory lane here, folks. This is where we need to go right now. If you'll give me 1 second here to put up this chart. This is a chart of the silver going back, way back when Hector was a pup. And if you'll notice here, back in April of 2011, we had open interest dropping and prices rising. That kept happening for about 4 or 5 days in silver. I happened to be in Hong Kong at that time. Silver was trading at almost the old high at $54. From 1980, it was trading at 49 and change. And from there, you can see that it went from 49 and change. The final bottom was down around $12. Last year, in the 2014. So this is what we have going on in the Dow Jones E-mini contract, and we also have it going on in the NASDAQ 100, the NASDAQ 100, the small one, the MQ. The same thing has happened. In the last 7 days, 6 of those 7 days, we've seen drops in interest rate, and on the one day that it was very minimal. We haven't had any drops in the E-mini S&P, but we've had very, very marginal increases considering the strength of the volume that's in there and the open interest. It's 10 times what the Dow Jones is, and it's 60% more than the 5 times more than the NASDAQ. So this is not good action. I know the prices are going up and everything looks wonderful, but from a technical perspective, looking at the open interest, you've got to be very careful in here. I know it's hard not to be careful, but, that's neither here nor there. Maybe it goes up forever, probably has. Maybe it'll continue. But we'll keep a really close eye on it no matter what we're looking at, that's for sure. Also, I would like to point out from someone in the den yesterday talked about this price that we were looking at 23.35 in the E-mini S&P on the weekly. And if you take a look at this chart, you'll notice that you're right at the level of, we hit 23.40 yesterday, which was the exact price of that big ABCD pattern that was in there. And it was also right at that 1.618 expansion. So any close above 2340 takes this thing into the area of the Starship Enterprise, which it's already been in that orbit. The question is how long it's going to stay in that orbit. So we'll watch that one very closely as we proceed through the morning. But the main thing is you want to be very careful if you're long the Dow E-mini and the Dow NASDAQ, because finally when the last short covers, there's no one that will fall on the no one that will help you out, because it'll just drop like a rock, is what it usually happens. The question about did Norm fall on his sword? Norm carries a very small bladed pocket knife. He doesn't take hardly any risk at all, and he's still in the sell zone, but he took a very, very small hit yesterday, and I'm in the order of around $200 as I recall, and he's looking at it again over the next day or so. But he like everybody else he's put a Band-Aid on it. Yes, he has. He's going to be just fine. Don't ever have to worry about Norm. He knows how to protect himself. This is all about probabilities, folks. Nobody's right all the time, and some people are wrong most of the time, yet they still make it through this business, and that's the real thing. Yes, they use the butterfly bandage. There were no stitches necessary. It was just a very small scratch, as they say in the trade, as opposed to someone that might have been in the in long gold over the last couple of days. Now, gold is down near that pretty good support at 12.15. However, it's come down here so fast that we have to be very, very careful of it at this particular time. Let me see if I can. I've got a chart for this, and I want to bring it up and show you what we're looking at, because here's where we are. Give me 1 second. We are almost, in fact, we are within a heartbeat of it, and we'll see here. This is what we've been waiting for. This is the price we've been watching. The low this morning has been $12.17. The $34 retracement off the high comes in at $12.15. So pay particular attention to the gold market here, because this is time and price coming together. As you can see from this chart, if you look at the time between January the 20th to January 27th, which was the new moon, we came down $34. And as you can see from the high that we had way back on February the 7th to where we are now on the 15th, we are now looking at a $34 correction. Any move below the 1210 level would certainly say that we're most probably getting ready to, and we could make the 61% retracement easy, folks. That's only at 1208. But right now, this is the ball game that we have going on in gold right now at this level of 1217, 1215. That's going to be very interesting to watch for sure. Ideally, and here we don't always live in an ideal world, I would love to see over the next week or two gold get down to the 1166 level. That's the one that I would really like to see if it's going to do it. But if we only make our bottom today, and that's a big if, of course, because we're down quite a bit. But any move that you get now above the 1247 level, you have to be ready to buy that, and you only buy it if it breaks above that. You remember we were on the show yesterday. Yesterday, we were looking at that 1237 level, how important it was. It had to get out of its way, and it couldn't, and that means it's going on.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the euro versus the U.S. dollar. We've been watching this all week. The move down from the last time we looked at that, which was on Monday. We've come down 120 pips, which is roughly $1,500. This is where, your target level is. We hit the exact number just a little while ago at 105.26. If you bought it there, you don't have to risk very much at all. It's a $100,000 contract. So risking only $250 on that would be the thing to do, in my opinion. The reason why this is so important is because this is exactly the same chart that we had in gold when gold was at 1184. And that's why it's so important. You'll notice here you have the ABCD structure coming down from February the 2nd. That ends up exactly where it hit today. You have the 1.27 expansion from the low on the 18th up to the high on the 1st, which was also a three-drive pattern, as you can see from the gray triangles that are there. You also have a 78% retracement from the 11th of January, where we came in exactly at the 78% retracement today, same price. And finally, we have a 61.8% retracement coming in off the low of January the 3rd. So you have 5 things to tell you that this is a very, very important one. In fact, I even missed one, folks. I'm sorry about that. I see it. This is the updated chart has it. This one doesn't. But if you take the low from the 27th of January and draw it in to where we are right now, that's the 1.618. So you have a 618, 786 contracting numbers, 1.27, 1.618 expanding numbers, and the ABCD. So you have 5 things to tell you that this should be it. And believe me, if it ain't it, go short, because anything below 105, we're heading down big time, most probably. So the risk here is very, very small. That's the whole premise of what you try to do with pattern recognition. But this is pretty much a textbook of how things actually work in some of these things. They don't work all the time, of course, but this is what you try to do when you're seeing some of these things. Now, I would like to I want to show it to you again, because this will be the same type of a chart. This is the dollar index. Let me get this up here for. So the dollar index, 50% of it, or 48% of it is the euro. And if you'll hold on one second, Cowboy, let's get this thing straightened up so we can see it. Did the euro? I guess it posted. Yeah, you'll be complaining if it didn't. If you'll go back to July, you'll see the 5 ratios at the same price. That's the exact upside down of what we talked about with the euro. You have 5 ratios coming together at the same price. The difference with the euro is it's coming down. With the dollar index at that time, it was going up, and it dropped from 97, all the way down to 94. That's a $3,000 move, and at that point, you can see it made a beautiful 1-3-5 pattern and a perfect Gartley. At that point, I believe Mr. O'Brien was on his little soapbox talking about it at that time. The old King dollar was back in play, and away it went one more time. The important thing here, folks, is that big red line there where we had the old high in October that extends over to where we were in late January. That came down and kissed that line. It was right at a 61% retracement. And right now we've got as high as almost the 61% retracement level. I think we got to 101.50 or something, probably even higher than that right now, because that's when the euro made its final move there. So if that's the case, we have to be really aware of what's going on in this, because any move above the U.S. dollar, above this 102 and change, which would break down the euro below 105.30, that would be a sign that the dollar is strengthening again, and this could be a really big move in that direction. So you want to watch it very, very closely. That's what I think is important. So whether that's going to be the right thing to do or not, we'll have to wait and see, but that's what we're looking at this morning. Now, we also have a situation. Hold on one second. I want to get the chart up so we'll be able to see it. Someone's asked me to bring up the chart that we had in the NASDAQ from yesterday. I updated it so you'll be able to see. We did these simple time counts, and that's all the... Yeah, thank you for that, POLR. I really appreciate that. I didn't have... I can't see the prices when I'm on the air, so it's a little difficult. But the dollar index is at that 101.55. I believe 101.70 is the 61% retracement. So it's very, very close. And if it's going to work, you're going to know right away. Anyway, you'll notice here we've had these 50-day up moves in the NASDAQ. There's been 1, 2, 3, 4 of them, with the fourth completing yesterday. And we did get as high as 52.81 last night, and that completed the ABCD pattern going back to last June. That's the same ABCD pattern that's completed in the E-mini S&P at 23.40. And it didn't get one tick higher than 23.40, at least not yet, but it's still early in the game, so we'll see how that works out. Okay, now the next question someone asked is about the favorite stock of everybody, which is Apple. Okay, one other thing. I wanted to update the euro this morning, what we were watching here, so you get an idea. This is the one with the updated 1.618 swing, as you can see, all of them coming together with the ABCD, and the fact that it's got down to that spot. Whether it holds or not, I don't know, but this is what you like to see, if that's the case. All right, we want to look at Apple, the fruit. Hold on just a second here. Let's get this ready here. All right, where are you, Apple? Oh, here you are. Okay, now this stock, they're talking about it again as the stock that saves everybody, and it does. It goes up forever. Well, not really, but it has huge swings. You can see Apple went from 132 to 88, and then nobody wanted it at 88. Now it's 135, and everybody wants it. Folks, this is how double tops are made. It's with this big ABCD pattern that you have from May through October. You pull back to a 50% retracement, and you go up and make a new high, and that's how double tops are completed. So there are a lot of reasons to be short Apple here. I just don't have the energy to trade it right here with all this bullish enthusiasm. But in a day or two, when things settle down, if they do, then I want to be watching it, because you got a double top with an ABCD and this huge gap to fill in Apple between 122 and 126. And just go back and look at the Apple chart. Go back as far as you want, 1982 if you like. You're not going to see any unfulfilled gaps in there. They're always filled sometimes. So the thing is, we've got to control our risk in here, but we did make a new high on Apple yesterday, and I'm not sure where it's trading today, but we should be close to that 136 level without too much trouble, I don't believe. And there's one other one that I wanted to show you. And boy, I hope I've got it in here because it's a really interesting one. It's one of your favorite stocks. Here it is. I do have it. Give me 1 second, and I'll get it ready. Move this over this pad here. Yeah, that yen weakening is all part of that dollar index, so that's going to be an interesting one to take a look at. So here is the, let's just get Goldman Sachs up here. This is the thing that's making the stock market go up. Yesterday, the Dow was up 90, and I think almost all of that was banking stocks. Goldman Sachs, J.P. Morgan, all the financials were strong. And as you can see here, we've got some patterns up a little higher around the 257 level. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. I'm going to talk a little bit about gaps here. I posted the chart of the Dow Jones Industrial Average. You can see the gaps that we've had. Of course, the important one was the day we gapped up above the 20,000 level, and the whole world put their red hats on. And then, of course, the market immediately broke a couple hundred points, and then to the 78% retracement, it got up and then broke out to the upside. Folks, when you see this many gaps in the Dow Jones like we've had here over the past week or so, I believe there's 3 of them. These are exhaustion gaps usually, especially when they're coming into to some of these really, key price levels that have been up here. The 1.618 on the SPX, the cash S&P was hit yesterday, spot on, along with the one in the NASDAQ and the one in the E-mini S&P. But the interesting one was, of course, the Dow went far, far higher than any of the others, and that's partly because of not partly because, it's totally because of the dollar stocks in the banking index, primarily, Goldman Sachs. That's a $250 number, and that's the most expensive stock in the Dow, and it has the biggest weight because it's a price-sensitive thing. So that's skewed a little bit, and this is what the financial press, this is how they report the market. It's the very first thing that you hear. What is the Dow Jones doing? They actually should be looking at what the New York Stock Exchange is doing because, that's the one that's the real market, but nobody knows what that is, and so nobody follows it. But it's certainly the one that really tells you what the real market is doing. It's left some gaps also. We've had a lot of gaps this past, starting Monday and Tuesday. We had these big gaps. Now, if this is correct, we should start to fill them one at a time. And sometimes they'll be filled very quickly. And usually if this open interest situation is correct, like I'm looking at in the Dow Jones E-mini and the NASDAQ E-mini, it's going to be very, very hard on the people that stay along that one because you'll break and you'll think it's a buying opportunity. In fact, it won't be. So the problem is when your open interest drops like that, it just means that buyers are leaving the market. And that's what makes it so difficult. Bull markets go up very, very quietly, and it's like it's death by 1,000 cuts if you're short. This one in the Dow Jones, this thing exploded up. This is how markets end. This is not how markets forget or break out to the upside. I just don't see that. But if we get another 150 move up in the Dow, this thing could go up forever, I guess. But I started looking at these books on the market, way back in the 60s. And then when I got into the 1970s, I was able to look at the market for through the eyes of Don Mack, who had the best library in the whole world on financial stuff. And he gave me the Gartley book. And from the Gartley book, I went under and I studied Schabacher and all the other people, Wyckoff, and just about anybody. George Cole was another one. And then, of course, I was able to meet John Hill, who was my mentor, and he pointed me in the direction of Fibonacci, and I read the Elliott Wave papers and stuff like that. But even looking at all of these charts over all these years, this is not how markets start, folks. I can say that with 100% the degree of confidence with a 10% with a 10% band on either side. But this is just one of those times that it looks really, really interesting for sure. Yes, I do remember February 2000 very, 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 very much. It was looked like it would go up forever. This was the old .com bubble. Boy, if that was ever a layup, that was it. That was so silly because they had these young kids out of the garage, became instant millionaires overnight. I think I've told this story, but I'll tell it again because it's one of my favorites. Greg Asoff, who's a big real estate guy in Southern California, his brother Jeff was the largest broker for Smith Barney, and I got Jeff into the business in 1974, right after he got out of school out of UCLA. And Greg went into real estate, and you don't want to hear the story. You want to hear about the money. I'm going to tell the story anyway because it's important. He hired this woman to be his escrow officer, and she worked with him for 5 years. She didn't have a job, and back in those days, in the mid-'80s, it was hard to get a job. And she stayed with him for about 13 years, I believe. And then her son, who was working out of his garage, had a little company called Sycamore Networks, and he gave his mother 5% of the company, or 3% of the company was worth like $8 million or something like that. She walked into the office one morning and said, "Here's the keys, I quit." He says, "Well, I can understand you want to quit, but could you at least give me a couple of weeks?" And she told her, he used the word that we don't use on this air with the big F, and she says, "I'm too F rich to even talk to you." And she never got out of the stock, and I think she got out with maybe $30,000. So that was going from $8 million to $30,000. That had to be a little bit of a spanking, but maybe she bought herself a nice little Tesla on the way down. Well, that was long before Tesla, but that is absolutely a true story, folks, and I remember it very, very well. Okay, let's talk about the Treasury bonds, folks. I believe Treasury bonds and Treasury notes, we've talked about this several times here, they're going lower. That means interest rates are going higher. They've already told us that. They're not even afraid of higher interest rates. This used to be a thing in the market that if interest rates went up, that was bad for the market. That's not necessarily true. You know, look at the times that we've seen this happen before. Not only that, but we have this thing they call quantitative easing that no one really understands what they're watching. You know, so those are the things that you've got to sort of pay attention to that I think are relatively important. But neither here nor there. That's the way it looks like. But bonds and notes certainly look like they want to go. They want to go lower, and that means higher bond prices. Any move below the bond in the 148 level basis of March bond sets up a price target, I believe, of 137. I'll do some more work on that over the evening, and we'll look at it tomorrow. But that's what it would look like to me. So this could be related to what's happening with the dollar and all these other things that we're watching too. Since we were talking about the Goldman Sachs, I wanted to show you this pattern in Goldman Sachs, because you have this little bit of a pullback, and then you have this really explosive move that we've had here in the last 8 or 9 days where we gapped up, and that target is somewhere between 252 and 256. But if we take a look at the banking index, you're going to see and this is where Goldman Sachs is the number one in the banking index. You'll see that we're right at the 1.618 expansion up here, just about another 40 cents in the banking index, and it might be there already today. I don't know if the banking index got to this 96 level, 96.30 level, but that would be the spot-on number that we would be looking at. So that's it. We're going to have a little break here, and then we'll come back and we'll discuss a couple other things in the markets for the grains, which I think are getting to be interesting. So, okay, we got a little bit more time. I have a question here from someone in in Rhode Island. They asked a question about is open interest really that prominent? And yes, it is, because it tells you whether the buyers or sellers are coming into the market. And that's what you really need to do. Just go to CME and read about it yourself.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look at that gold again. People have asked me to watch it. Main thing is that this is the chart that we posted. This was several days ago, back on the 11th. We were watching for this $34 correction that we were watching for. It came almost to the exact price today. In fact, $34 came in at 17, I believe. 34. Yeah, it's right around $17. So if gold strengthens from here, folks, it's got a really good chance, to have one heck of a move to the upside if it does that. So we waited for that yesterday. It didn't happen, and then, of course, it moved to the downside. Now let's switch over to one of the big markets. This is the second largest of all the commodity markets. This is the Treasury bond market. The largest market, of course, is the Treasury notes. It's 6 times bigger than the Treasury bonds. It just doesn't have that, wild volatility that commodity traders like to have. But you'll notice here that we've had the high in bonds was back in June of last year. Actually, it was July of last year. And you'll notice at the very top, if you'll see where the writing is for T-bonds weekly, you'll notice the two 1.618 expansion numbers coming in there at exactly 177. And this market basically came straight down. It had 2 weak rallies, very weak. This past one that came right off of the 61% retracement stopped right at the 61% retracement. As you'll notice, there was a nominal cycle there, which was 76 weeks between each one of them. The problem that we have in the bonds here, usually when you hit a major cycle like that, the market will explode off of that level. And, this market hardly moved at all. It moved about 4 points, which was equal to the small rally that we had back in August and September. That's why we say anything below this 148 level is going to signal a move at least to the 78% level down to the 139 level. That's 10 handles. And but rates look like they're going higher. They're, and believe me, even though the rates went higher, they really have not gone down very much considering what they're looking at in Treasury in the short-term paper and also in the mortgage. Mortgages have gone up a little bit, of course, but the real big increases have not even begun to happen to this thing because this market really started in trading bonds in 1976, and it was trading at around 55, I believe, somewhere in there, maybe around 70. Then it went down to 55, 56 when it finally bottomed in 1982 at $54. That's where you bought a $100,000 bond for $54,000. You kept it to maturity, and that was one heck of a deal. If you had kept it for 30 years, it would have made a really good return. But the market, as you can see, has pulled back to some really important technical levels at the end of December. We did have that little bit of a rally, but again, it should have been a whole lot stronger, folks. That's telling us that this market, it doesn't have any friends. And I think if we get below this 147 level, 146, it's going to have even less friends than it has now, because the situation in the bonds is really interesting to see what's going on. Would someone be so kind? Thank you very much, Dennis. That's what I wanted to know. The high today in the banking index was 96.45. Let's just check the old house on the wall here and see what this number is that we had here. This might be it in the old banking index. 90. The high was not. Wow, can you believe that? Take a look at that little blue line there where it shows what the price is. 96.45. That's this morning. In 20 minutes, it might be 96.85, but for the first part of the day, it seems like it's holding its own. So we'll see how the rest of it's going to end up as we go through some of the things this morning. There is a someone's asking a question. Oh, all right. They asked a question about the British pound. I want to bring this up to you today to show you what we're looking at in the British pound here, because we think we've got a little bit lower to go here in the British pound. Should be running at we should get down about another two full points from where we are now. We got down to 23.80, so we get about another full point to come down in the British pound before we come into getting anything that looks real interesting from the buy side on that. Getting back to gold, because I'm very interested in this gold. The silver has already broken out above it, and then it's pulled back. Let's just look at this very, very quickly here, and we'll see what we've got here. You'll see the silver has broken out of that long-term trend line from June. We got above 1810. We pulled back a little bit with the sell-off today. So that's why you want to look at strength in this thing, because if the strength comes from this level, after down $34 in gold and down 40 cents in silver, that is going to be a very, very interesting thing to watch. Oh, okay. Someone wants to see the long-term picture of the euro. If you give me a second here, I'll bring it up here. You'll be able to take a look at it. This is a chart going back about 3 decades. I guess that's long-term enough. You've got some nice cycles in there between 85 and 2000 and where we are now. So there's a possibility here, this 103 level, even though long-term it can be very, very bearish. You could see a rally of probably even 20 handles in the euro. That would surprise the whole world, including this old cowboy. But right now we're at a real critical level on the 4-hour chart and the dailies and the weeklies. But on this monthly, you can see that we've had huge moves. The big ABCD when it got to 160. And then, of course, when it was 2000, when my grandson was born, it was trading at 85. I happened to be bought some euros for him then. And whether that means anything or not, about 2 euros, I mean, he should be happy about 2 euros, I would think. Okay, now we have to get to the next one, which is the, give me a second here. This is the Apple. No, that's not the Apple that I wanted to see. No, I already posted the Apple. Anyway, we'll just keep an eye on these things. Could someone tell me the high in Goldman Sachs today? Did we hit 252 in Goldman Sachs? I'd like to know if we got to that level. I can't pull it up right now, because if I do, I'll lose internet connection, and I don't want to do that. So I'm not going to worry too much about it. So we'll move on to the next one here. 2015 high. Okay, thank you very much, and we'll see what the rest of these things are looking at. One other one that looks interesting in the banking section here that we've got an eye on is hold on here, is the, let's put this up here, is the American Express. You'll see here, we'll be looking at that here. And this is American Express. We'll be looking at that very, very closely here for a potential sale in American Express, because it's made the 61% retracement. It's went a little bit above it, but, considering the rest of the stocks, how they blew off, this one went, like 0.1% above the 61% retracement. So that's another one that looks, interesting from the perspective of some of the things that we're watching here. right now. Keep an eye on the NASDAQ, folks. If you want to rock and roll to the NASDAQ, watch for retracement in the NASDAQ, because if we get into this area within about right about where they are now, you could be you'd be able to make it. I think we'll take a break here.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a caller from Singapore. William, are you there?
Yes, I'm here. Thanks for taking my call, Mr. Pesavento. Okay, we noticed that the gold just now, we have a sharp drop and a sharp up. It's almost like a V-shaped recovery. Could I say that the low has been what you call bottom, since we have reached almost a 1215 level?
Yes, I think so. And what I would do is, if you're in this, I would put a stop at the 1220 level. That way, you don't have to risk very much at that point because it's still in a downtrend. And, but if we can get the gold above 1237, then that's going to change everything, and it's going to get very, very bullish. It looks, very powerful because we just made that $34 correction. That made it, just perfectly, just like the other one we had, a few weeks ago.
Yes.
So this is what we'll do and see if it'll hold up, and that's the way it looks like to me. Though I'm bullish longer term, but we really need it to get above the 1248 area. Then it would really go. In my opinion, I think that'll be a big breakout to the upside.
I see. So could I say that as long as gold could go above 1237 or 1248, unless they go above this level, otherwise we still have dangers to go down to 1166 that you mentioned earlier?
Yes, we have to be aware of that, because the key was it had a chance to get above that 1246 several times. It was not able to do it. That tells us that it's strong resistance. Silver was able to do it, but gold was not. So I think the safest thing to do is to wait to see if it'll break out above that 1250 level, and then that's the time to say, yeah, this is where we have to play, and it has a pretty good potential from that. The longer term on the dailies and weeklies, as you know, look extremely bullish from a technical standpoint. And not only that, but we're seeing some good increases in open interest. In other words, players are coming back into the gold and silver market again, which is also very important. Thanks for calling in, William.
Thank you very much, Mr. Bento.
Yeah,
thank you very much. Thank you. Bye-bye.
Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.